Welcome to Stocks in Translation, broadcasting from the New York Stock Exchange. I'm Jared Blikre, your host, and with me is the people's voice, Sydnee Freed. First, please like, subscribe, comment on Stocks in Translation on Spotify, Apple Music, Amazon, or YouTube. And today we are welcoming back Kenny Glick. He is the owner and operator of HitTheBid.com. Hello, guys. We got a great show lined up, and we're gonna get an update from Kenny on the space, rockets, robots, and quantum trade, which he was the first to brand in 2024. Our phrase of the day: Jack be nimble, Jack be quick. Jack jumped over the candlestick. Why we market technicians just love our candlestick charts. And this episode brought to you by the number 22. That is the high so far for the VIX volatility index. Why active traders here like Kenny, why do they pay attention to it and even trade volatility? So tell us what you're seeing so far in 2025.
Sum it all up,
Yeah.
all right?
Oh, right.
It's been a pretty amazingly active start. And a lot of people were negative because we saw some volatility. Volatility is what we want, my friend.
As a day trader.
Yes. So, go right back to those quantum stocks. So
Yes.
That was all the rage. We got in at those lows and everybody started getting involved. It became the fad, just like I said it would. And then when everybody gets involved, it's time to make your way for the exit. So it was a coincidence, okay? You had Nvidia talking about how these quantum stocks were getting ahead of themselves.
Yeah, Jensen killed it.
Thank you. And again, we saw some rounding up, off on the tops, but it wasn't ready to make that move down.
The floodgates.
That was the catalyst.
Yeah.
And the fun part is that, the first dip buyers, they got annihilated. But now, if you're watching the market today, phenomenal. The dip buyers are getting paid. And the crazy thing about these stocks, some of those are 3,000% gainers. So when they fall 50%, everybody's, freaking out. That's what you want, my friends. And the dip has been bought. It's fantastic. It's a great start to the year.
I really miss day trading. All right, we got to get to our word of the day here, which is perfect. It's candlestick. Traders use candlestick charts to analyze price action. The body of the candle shows the opening and the closing prices, while the wicks, which are also called shadows, they show the highs and the lows. And I asked ChatGPT to write a limerick about this, and he or she came up with, "There once was a trader so smart. He mastered the candlestick chart. With a body and wick, he could spot the top tick and the trends that would fatten his vault."
Wow.
How do you think about candlesticks? Better or worse now?
I want to say we're having too much fun right now.
Yeah.
It's too
Now it's
much.
back.
Well, you know what? It's funny. We had this conversation the other day. We call it chart art. Shout out
Yes.
to my boy Howard Linzon from StockTwits.
Right.
Chart art. It's just gorgeous. And some of these charts, when you're doing this, when you're just looking at these charts for 10, 20, 30 years, remember those paintings where you would stare at it and a paint and something would come out
3D.
and you'd be like, that's what these charts are looking at to me. Sometimes they make you feel something.
There's a lot of emotion tied up in charts. When I see a long wick, I might see fear to the downside if it's a down candle. I might see greed to the upside, but there's a lot of emotion in these charts.
Oh yeah. Nothing like an engulfing candle to get your heart racing.
What chart does make your heart race the most?
Oh, I love an engulfing bearish candle. So again, what we were seeing in the market, and I thought,
Like Nvidia a few weeks ago.
yeah. So we had this blow off top, and then in that same candle, you break prior lows. Usually, you're going to get a decent sell off, and we got it. Again, but it was contained, and now we're seeing, bullish candles, obviously.
Why don't you walk us through what's going on when these various levels are hit? And we're talking about a bearish engulfing. Let's just stick with that. So you have this candle and its range is greater than the prior day over here. And then you have a low which takes out that stop. So you have people who might get stopped out there. Just kind of take us frame by frame by how these things develop.
You kind of just nailed it. So what I look for as a bear trapped in a perpetual bull market is I want to see stocks that hit new highs, but at the same time break that prior low candle. So when you break those prior lows, that triggers stops from people that were swing trading, and obviously day traders like me that look for prior day lows. Walk you right through that. You're shorting at that prior candle, and then the best part about it, again, if you're short, you have a tight stop back at that level where it came from. So, and again, as I was coming in all really excited about being short, it's over. It's over.
I really don't want to ask this, but how do you use VWAP? I just, the term VWAP doesn't do it for me. I just have
Because you like it, you pronounce it VWAP?
VWAP.
It's VWAP. It's VWAP. But
It's VWAP.
Some people go WAP, I go WAP. WAP, WAP. It's all good. We could sing songs about it all day. But when it comes to VWAP, is great about it is that it triggers that sell-off. So if you're looking for those candles, sometimes the candles, you'll get the wick and you'll get wicked out of it. But if you're below the VWAP on the breakdown, usually on the right side of that trade, and that's when you get the follow through.
Okay, wait, if you've been completely lost so far, viewers or listeners.
There's a conversation between two people
yes,
here, I'm sorry.
Do you have a recommendation for where someone can start learning about all these charts, like a book
Brian Shannon.
or a person that you really admire? Because this is very complicated stuff.
Absolutely. The guys that, the godfather, or I would call him the emperor of VWAP was Brian Shannon. And let me give a shout out to my friend Zach Hurwitz from the VWAP.com. He brought it to me on a multiple time frame basis and kind of like solidified what Brian was kind of showing me back when I met Brian, got to be 2007, 2008. So when I saw it in motion, that's where it all comes together. When you see, and we talked about this last time, the rigging of the market and chart art, when you see a stock break up today's VWAP, it's like a 1 minute VWAP, and it pulls back and hits that exact price from the day before, you just have to say, okay, this is where I need to be. And you're seeing where the stock wants to live, and that's how you trade on a daily basis.
Let's talk about the different ways we're quantifying and using VWAP here. First of all, it kind of got its start on an intraday basis. So
Right.
You would only consider the day's trades. You'd take an average of all the prices and the volume at those levels, and that kind of draws a line throughout the day. It kind of looks like a moving average, but
Right.
it's from a fixed point. But then the bright idea, and I think this got started in the 1990s, there was a guy named Paul Levine who actually created something called the Midas method, which is just like VWAP. He would anchor it at a certain point, and then it would lift off and he would measure VWAP from there. So you could do it from the beginning of the year, you could do it from an important higher low, and that's what we're talking about when we talk about these equilibrium levels, because the price might go like this, but VWAP trades it, and then you got to stop potentially.
Right. What I look at as far as anchored, I like anchoring it to prior day. Because a lot of the activity, again, as a day trader, we look at the extended, I look at yearly, even 3-year charts. A lot of my winners, like these quantum stocks, came out of these 3-year doldrums that were breaking this multiple time frame VWAP. But when it comes to day trading, we're generally staying between the 1 minute and prior day. So I have my charts automatically anchored to the prior day. And from just experimentation, when Brian and Zach were showing me this, it took my feeble mind about 18 months to really grasp it, but now I see which trades work the best. And again, we're right in the heart of where I love to trade, earnings season. So when stocks are gapped up, and again, the easy answer is stocks above VWAP strong, stocks below VWAP weak. It's kind of, that's too vague. What I like to do is take that strong stock that's breaking VWAP, and that's when I short it, and I use the prior high candlestick wicks, like you were talking, as my stops. So really,
Bring it all together here.
Yeah, that is my trigger. So when you look at a gapped up stock, and there's always good news on it, and everyone's excited, I look at it as an opportunity to short at when it breaks down under VWAP, because that gives me the advantage of knowing that there will be some institutional selling and usually has some follow through, because most of the market is now being done by algorithms, and 80% of it, I would say, is automated.
At least.
Yeah. You're not a big fan of fundamentals, though, right? And we're in earnings season.
I don't even understand that word.
I don't know. But stocks move a lot on earnings.
You get volatility.
Yeah, you get volatility. So how do you square that?
That's the catalyst.
Yeah.
So let's say Goldman Sachs reports a blowout number. Great. I don't need to crunch the numbers. I know it was a good number, and the stock's acting accordingly. But quite often, the stocks will act not according to the headline, because somebody already made that bet 2 days ago that Goldman Sachs was going to have great fundamentals, and they're going to take their reward by selling their stock. Now, again, today it had a monster move and another move higher. Again, I'm just talking about today's action.
Sure.
We found an opportunity to short the JP Morgan, found an opportunity to short Goldman Sachs and Citibank, but they were very short-lived.
Talk to us about some of the risks that we have in this market, because a lot of newer traders are coming in and they're shooting from the hip. Impart some of the knowledge, like how you handle the risk and volatility and leverage.
Well, the new players are all about momentum. Momentum is your favorite. I mean, again, momentum on the way up is hard to stop. It's almost like an oil tanker. For a shorter, the stock's ripping this way, and you need the turn. Your stock's still going up, even though it's sort of starting to turn. But for the noobs, it's all about momentum. And they have to remember that momentum on the way up, when it's met with equal momentum on the way down, it's hard to stop that ball from rolling also down the hill. Yeah. So I don't know if that answered your question, but yeah, I mean, briefly, try to sum it up as easily as I could. Go back to the VWAP. If you're trading right now, if anybody's getting started right now, trade VWAP. It really just cuts through all of the other moving averages. And if you just look at any chart system, you just drop down that menu, there's hundreds of things to choose from. VWAP solidifies
very
it all.
similar. Yeah, you go to the Yahoo Finance site. We have literally dozens, if not hundreds, of indicators.
Right.
We have anchored VWAP because we had that programmed on the recommendation of Brian Shannon a few years ago.
What's anchored versus non? Is that non-anchored?
Yes. So when we think about moving averages, for instance, it's an average that you just look back 200 days, for instance, from wherever we are, 200 periods from where we are right now. And as you move forward day by day, you're only looking back 200. But the anchoring just means that you're starting from a fixed point, and as the prices kind of proceed, you're not moving the starting point. So with a moving average, the starting point moves, and with an anchored, it just stays there. But what it does is, for instance, let's take an important low. Let's take the beginning of the year. You want to know where the average person is in Bitcoin or Apple stock. You just take VWAP from the beginning of the year. If the stock is above that VWAP line, then it's in the money for the average trader. And then when it gets below that line, you know that something's flipped. The average trader is now losing money. And at the margins, you have anybody who could be doing something. It could be a lot of profits or a lot of losses, but the average is where the equilibrium is found.
Nice.
Very good.
All right.
Very nice.
Very good.
Hey, should we talk more about the quantum trade?
Yeah,
I also
talk about stocks.
I want to know what your next space rocket quantum trade is.
Right now, they're all in play, and it's incredible. It's like these stocks are moving in 20, 50, 100% increments. So what I'm looking for is I'm just looking for another washout, and then we'll see who's boss. It's going to be the same stocks: RGTI, QTUM. You're going to see QBTS, all that type of stuff.
Are you playing the long side in any of these, or just waiting for the shorts to
We're
sell?
playing both sides. Yeah, both sides. And what's nice is that some of these stocks have options. And we were talking about that last time I was on. When they're running like that, and you see a stock up 200, 300%, usually you're going to get a pullback. So what we did was to be involved in these names, we bought some calls. So then you're only exposed to what you bought the options for. I don't want to own some of these stocks, but because you just don't know which ones are going to just roll over and never come back. But, I do love this Lunar. Speaking of space, this is a company that has, you have contracts with NASA, as far as the internet's telling me. Again, I'm not in there with them. But, again, I'm a very, bearish guy. That's what keeps me on my toes. So I like the action in the name. The pullbacks keep getting bought. The news keeps getting, again, I like seeing positive reactions to news. A lot of times it's sell on news. So LUNR, very nice. And again, some of the AI stocks now that they got beaten up, SOUN, big fan. That's SoundHound. Yeah. But I love the Lunar because when this came out of a SPAC, it ran to about 130. That chart looks so bizarre, but it's real. So if it can get into those...
I'm going to have to look at this chart.
Yeah, if it can get into the 30s, it can legitimately go to 50, maybe even like $80.
All right, we need to take a short break. Coming up, we're going to be talking volatility. We're speaking about options, but volatility and critically how Kenny trades it. And it's options expiration day on the runway on today's Who Wore It Better. All right, we are back, and this episode is brought to you by the number 22, which happens to be the high of the VIX Volatility Index so far this year in 2025. As Steve Sosnick of Interactive Brokers has hammered home many times on this program, the VIX is strictly speaking the 30-day outlook in volatility for the S&P 500. It's not quite the fear gauge that people say it is, although I still use that phrase sometimes. But I want to know how you're using and trading volatility, because it can get pretty dicey.
Thank you so much for asking this question. I'm going to sum it up with 4 letters, UVXY. Talking about the fear gauge. UVXY is a derivative, let's call it, of the VIX.
Yeah, because you can't trade the VIX.
Right. Or you can, but you don't want to. It's a weird expiration. But UVXY is a product that's basically built to go down. And it tries to reflect the fear of the day. So as a day trader, especially for the shorters who are, having a hard time right now, if UVXY shows any kind of strength, you know that the sellers are out there. And my God, if it's actually trending higher, UVXY, you know the market's in trouble. And we saw some nice spikes in UVXY. Obviously, the yen carry disaster in August. You had UVXY spiked from $20 all the way to 60 and change.
And then Volmageddon in 2018 blew out. I don't even know what happened to that old ticker.
Yeah, the VIX, they had to reinvent the VIX products. Right, so UVXY is right there. So that is where I focus my attention. I watch the VIX, I'll watch the futures trade, but it's generally UVXY because when that usually it's disintegrating. That says, all right, everything's okay.
So you're using it as a signal, but you're also trading it?
Yeah.
Because when I was trading, I would use it just as a signal, like it would confirm something in the E-minis that I was seeing, or, but I never actually traded VIX futures or anything like that. But isn't there a lot of danger? Haven't a lot of people blown up just by shorting the volatility to oblivion?
Oh yeah, you can get hurt, as long as you don't go over your head. Just like in any other trade or any other gamble. You hear the commercials, don't trade with money you can't afford to lose. The UVXY always reverts. This is maybe one of the only guarantees.
It's not like a stock index.
Right.
It literally has to go back up.
Right, it has to go down. So as long as you're not getting a margin call, which has happened to me, I'll admit it. Again, we talked about it last time. As long as you don't trade over your head, the reversion will always come and you can make money shorting UVXY. So just start small, and if it goes against you, don't panic. You just feed the beast, and then eventually it rolls over and you make your money.
Can I clarify? So it's good if UVXY is going down?
That's usually
a good indicator.
That means the market's healthy. Yeah.
Just like the VIX, sort of.
Right.
Well, you don't want to go too low, but
right.
Yeah.
Right.
That's
right.
kind of crazy.
But the real thing is that UVXY is a product that's built, has the contango and it's built to go down. Mm-hmm. So it's alarming when it's strong. And there's something wrong. So if the market's kind of like wishy-washy and you see UVXY starts to rally, I think the market's going to get weaker. And
do you have like a scary volatility story? Because we're talking about indicators. When you saw an indicator and you were like, oh no.
Well, I was on the wrong side of it in August.
That's why it's scary.
Yeah.
Otherwise, it's euphoric.
I had some crazy leverage on, and it was a Sunday night, so I was sitting there just waiting for the market to open up to see how bad this was going to be.
Paul Tudor Jones movie in the making here.
Oh my God, it was terrible. I was like, they invented a new way to make the VIX go up, and it was moving in 5-point increments. That was the futures. I had never seen them move that quickly, and I was short. So I was just waiting for 4 o'clock in the morning till they started ticking on UVXY, and it was a good amount of money away from where I needed it to be, and I fought my way through it. But
you're here.
It was pretty bad. Yeah.
But you live to trade another day. And speaking of that, how do you manage risk? Like, how do you think about risk, and when do you start thinking about risk? Is it before you take the trade?
Oh man, as a pessimist, again, thanks to my mom, I was raised, nothing was ever going to go right for me. So I'm always pessimistic. I prepare for the worst first. So at any time, and again, most of these are day trades. I'm liquid and loving it right now. That's my hashtag, liquid and loving it.
Liquid and loving it.
Liquid and loving it,
See that on, not an epitaph, but something.
There you go. Liquid and loving it. And, again, so each trade is just brand spanking new. So today, exactly. What's great about candlesticks and great about VWAP and just trading price, it really comes down to exact price. So for instance, Goldman Sachs, JP Morgan, Citibank, when they start to roll over, those rollovers are my stops and your risk is defined. Every trade I put on is going to be defined right as soon as I do it. Here's where I'm shorting it. If I'm wrong, and I say, if I'm wrong first, this is where I'm going to react. And if I'm right, this is where I'm going to reap some profits.
Do you ever have overnight risk, like you're in a leveraged position, or maybe it's unleveraged, but do you ever find yourself not liquid at the end of the day and you wish you were?
Yeah, what are you in my head right now? Yeah, of course. But now I'm trying to make a concerted effort not to get into any positions because this is the beginning of earnings season. I love to be liquid. And again, if I'm right about this market having some more volatility and UVXY picks up, I'd rather be liquid and be ready to rock on the downside without having to worry about my positions. But as far as risk management, the overnight risk, once you take something overnight, you're in the hands of the matrix now, and you just don't know what's going to happen.
For someone who classifies themselves as a bear, I feel like long positions are bullish, right? Like you're expecting prices in a stock or ETF or whatever to go higher. How do you juggle those two sides of your brain?
I'm the most bullish bear ever.
Yeah.
Right. I'm a bear trapped in a perpetual bull market, and those are the lessons I learned. So from 2008, 2009, when the financial crisis, I was having a pretty good time. Shorting the Bear Stearns and the Lehman,
the only one,
kind of giggling about it a little bit. But then that monster rally that ensued from 2010, 2011, 2012, by 2012, I was like, all right, you guys have had enough. I tried to step in and I got beat. I got beat down 2012, 2013, just fighting the market. But those 2 years just really solidified this new saying that I have: shorting is short-lived and you're gonna die because you just can't fight this market.
On that note, it's time for Who Wore It Better? Options expiration edition. So first up, we have the monthlies, and we're talking options expiration here. So we have the monthlies, that is the little black dress of options, classic, steady, always in style. Next up, we have the weeklies, the bold statement piece, much like a Grateful Dead t-shirt. Fast, fun, and perfect for traders who want to stay ahead of the trend. And finally, we have dailies, the micro, mini, flashy, risky, and gone before you know it. Don't blink, by the way. Let me ask, so this is all tongue in cheek, but how do you think about options expirations? Any of the ones that we're talking about, monthlies, weeklies, dailies, you like better? Are you in at the last minute?
Well, I got to tell you, we're going to go back way back when I was an option principal. You know, there was nothing to choose from. You know, at first, when options first came out, they were just only calls. I don't know if you know that or not, but they didn't want you betting against the market. Fast forward, you know, there was 5-point increments, monthlies. When weeklies came out, that was Candyland. So imagine how we feel now with these zero-date options. They are not to be feared. They are to be embraced. Because here, you know, we trade the QQQ almost every day. Not everybody can buy 500 shares of a $500 stock, even as a day trader. But now you're able to trade a $500 stock that moves 5-point increments with these zero-date options. When you have the volatility, for instance, like yesterday, this is where the small account player can get involved with a $500 or $1,000 trade and make 5, 10x going into the close, because that volatility yesterday, when they sold the market off near the end, you knew that volatility was still there. So we were buying calls at the end of the day. Yes, as a bear. We were buying the 514s, you know, just to give you the exact example, 514s yesterday, we're sitting there at a dime because you only had a half an hour left. And it's, you know, you're thinking, okay, why would I do this 2 points out of the money with a half an hour left? These are going to expire worthless. But the extreme volatility, boom, you rallied 2 points into the close. Those 10-cent options were trading at 250.
How much experience do you need to trade these? It sounds like you really got to know what you're doing, though, still.
You have to know which one to buy. Yeah, you need to get your timing. Your timing needs to be impeccable, because generally it's either you're making, well, the
nature of leverage.
And you're usually making 2, 3x, maybe 10, 20 when you do hit them right. But when you don't hit them, it's 100% loss because they're done.
All right, 30 seconds left. Any last words for investors here?
Investors, I think it's going to be a little bit more difficult to repeat what we just witnessed for the last 2 years. Palantir,
so
I'm
20+% in the S&P, no.
I'm going to go crazy. I'm going to go only 3.5% gain this year.
Whoa!
I know, wild.
Anemic.
Yes,
but it's positive.
Anemic, but it is positive. I just want some volatility. I want to see this. I want to see this market get to the point where people are a little afraid. Nobody's afraid.
I have no doubt we will get there at some point this year. That I'm sure.
I don't think we need to get there, though.
Yeah, I'm not saying I want to.
Some of us are watching our accounts, you know.
Buy on dip mentality. Just get ready to buy the dip.
All right, we are winding things down here. So be sure to check out all our episodes of Stocks in Translation on the Yahoo Finance site and mobile app. We're also on all your favorite podcast platforms. Kenny, thank you so much for dropping by again. We look forward to following up on robots with you again in the future.
Great, man.
See you.